today's video session, we shall take up session 4 of chapter Company's Account, Issue of Shares of Class 12th Accountancy. Company Accounts, Issue of Shares, Session 4. Topics that will be covered in today's session are concept of forfeiture and reissue of shares, accounting treatment upon forfeiture and reissue of shares, calculation of capital reserve on reissue of shares. After this session, you will be able to state the concept of forfeiture and reissue of shares, explain the accounting treatment of forfeiture of shares, explain accounting treatment of reissue of shares, pass the necessary journal entries on the reissue of shares. In the last session, we have covered some basic accounting aspects related to issue of shares. In today's session, we are going to further discuss the remaining concepts related to issue of shares. As we have discussed in our last session, if a shareholder fails to pay the due amount of allotment or any call on shares issued by the company, the board of directors may decide to cancel his or her membership of the company. With this cancellation, the defaulting shareholder also loses the amount paid by him or her on such shares. Thus, when a shareholder is deprived of his or her membership due to non-payment of calls, it is known as forfeiture of shares. Now, let us discuss the cases of forfeiture of shares. Case 1. Forfeiture of shares issued at par. When shares issued at par are forfeited, the accounting treatment will be as follows. Case 1. Debit the share capital account with amount called up whether received or not per share up to the time of forfeiture. Credit forfeiture account with the amount received up to the time of forfeiture. Credit unpaid calls account with the amount due on forfeited shares. Following journal entry will be passed upon forfeiture of shares issued at par. Share capital account debited, that is amount called up, to share forfeiture account, that is amount paid by shareholder, to unpaid calls, that is amount called but not paid by shareholder. The narration is being number of shares forfeited on account of non-payment of allotment or calls. The point to be noted here is amount called up is equal to number of shares multiplied by called up per share. Amount paid is equal to number of shares multiplied by amount paid per share. Amount called up not paid is equal to number of shares multiplied by amount called but not paid per share. Let us solve a question on this topic. XYZ Limited forfeited 100 shares of rupees 10 each for non-payment of first and final call of rupees 3 per share. Pass the necessary journal entry. The solution is share capital account debited rupees 1000 to share forfeiture account rupees 700 to share first and final calls account rupees 300. The narration is being 100 share forfeited on non-payment of first and final call of rupees 3. Let us discuss case 2 where shares are issued at premium and thereafter forfeited. There can be two situations again. It has two categories. When premium money has been received prior to the forfeiture, if the amount of premium on shares forfeited has been received by the company prior to the forfeiture, securities premium reserve account will not affected. In this case, the journal entry of forfeiture of shares will be similar to the entry made as if the shares has been issued at par. The journal entry will be share capital account debited with the amount called up to share forfeiture account with the amount received except premium received to unpaid calls account or call in arrears account with the amount not received. The narration is being forfeiture of shares made issued at premium. Let us discuss case 2. When the shares are forfeited on which the amount of premium has been made due but has not been received either wholly or partially. the security premium reserve account will be cancelled. At the time of making due, security premium reserve account was credited. So now on forfeiture it is debited to cancel the previous effect. The journal entry will be as follows. Share capital account debited with the amount called up. Securities premium account debited with the amount not received. To share forfeiture account with the amount received except premium if partially premium was received. To unpaid called account with the amount not received. The narration is being forfeiture of shares originally issued at premium due to non-payment of dues. Let us solve a question reflecting this case. The Urban Technology Company Limited offered to public for subscription of 1 lakh shares of rupees 100 each at a premium of rupees 10 per share. The amount was payable as under. On application, rupees 30 per share. On allotment, rupees 30 per share including premium of rupees 10 per share. On first call, rupees 30 per share. On second and final call, rupees 10 per share. Applications were received for all the shares. Allotment was made to all the applicants in full. Ansh failed to pay allotment and call money on 2000 shares held by him. Let us solve this question. The journal entry for forfeiture of shares would be share capital account debit rupees 100 multiplied by 2000, that is rupees 2 lakh, which is total called up capital amount. Security premium account debited rupees 10 multiplied by 2000 shares, that is rupees 20,000, which is the amount of premium called but not received. To share forfeiture account 2000 shares multiplied by rupees 30, that is rupees 60,000, which is the total amount received by the company. To share allotment account 2000 shares multiplied by 30 rupees, that is rupees 60,000, which is the amount of call in arrear. To share first call account 2000 multiplied by rupees 30, that is rupees 60,000, it is also the unpaid call amount. To share second and final call account 2000 shares multiplied by rupees 20, that is rupees 40,000, it is to the unpaid called amount. The narration is being forfeiture of 2000 shares held by Ansh who did not pay the allotment and call money. Our next topic is reissue of shares. Forfeited shares may be reissued by the company directors for any amount, but if such shares are issued at a discount, then the amount of discount should not exceed the actual amount received on forfeited shares, if any. The following journal entry will be passed. Bank account debited, that is amount received. Share forfeiture account debited, that is loss on reissue. To share capital account with the face value of shares. To securities premium account if shares are reissued at premium. After the reissue, if there is no balance in the share forfeiture account, then there will be no capital profits. But where there is a profit on the reissue of forfeited shares, such a profit is treated as a capital profit and balance or amount relating to the shares reissued will be transferred to capital reserve by following entry. Share forfeiture account debited to capital reserve account. The narration is being capital reserve created on the reissued shares. Let us solve a question on this topic. Neelam Tech Limited has issued its shares of rupees 20 each at a premium of rupees 2 per share. Mukesh, holding 1000 shares, did not pay final call of rupees 5 per share. Later on, the company reissued 500 shares of these forfeited shares at rupees 17 per share. Make journal entries for the forfeiture and reissue of the shares in the books of the company. The solution of the above problem is the following journal will be passed in case of reissue of shares. The first entry is share capital account debited rupees 20,000, that is 1000 shares multiplied by rupees 20, which is the total called up amount. To share forfeiture account rupees 15,000, that is 1000 shares multiplied by rupees 15 which is received. 2 share final call account rupees 5000, that is 1000 shares at the rate rupees 5 which is unpaid, being forfeiture of 1000 shares for non-payment of final call money. It may be noted that whenever total amount on a share is called up by the company, then the called up amount equal to the face value or the nominal value of the shares, like in this case. The next entry, which is half of the shares, that is rupees 500 shares reissued at the rate rupees 70. The entry would be bank account debited rupees 8500, that is 500 shares multiplied by rupees 17. Share forfeiture account debited 1500, that is 500 shares multiplied by rupees 3. To share capital account rupees 10,000, that is 500 shares multiplied by rupees 20, that is the face value. The narration is being 500 shares reissued at rupees 15 per share. On reissue of shares, capital reserve entry would be the third entry. It is share forfeiture account debited rupees 6,000, that is 500 shares multiplied by rupees 12. This rupees 12 is calculated by rupees 15 on forfeiture minus rupees 3, that is loss on reissue, to capital reserve account rupees 6,000. The narration is being balance in the share forfeiture account of 500 shares reissued transferred to capital reserve account. You can see the total amount of share forfeiture account has not been transferred to capital reserve, only adjusted amount of reissued shares has been transferred proportionately, or in another words, proportionate amount will be equals to 7,500, that is half of the total of the amount, as only half of the shares has been reissued. After adjusting loss on the reissue of rupees 1,500, the balance amount, that is rupees 7,500 minus rupees 1,500 has been transferred to capital reserve as capital profit. Let us solve another question for further elaboration of the concept of forfeiture and reissue. Dheeraj Limited invited applications for issuing 1 lakh equity shares of rupees 100 each at a premium of rupees 10. The amount was payable as follows. On application rupees 10, on allotment rupees 30 including premium, on first call rupees 30, on second and final call the balance amount. The issue was fully subscribed. Rahul, to whom 5,000 shares were allotted, failed to pay the allotment money and his shares forfeited immediately after the allotment. Share forfeited reissued to Manav at rupees 120 per share, fully paid up. Pass the journal entries for forfeiture and reissue of shares to Manav in the books of Dheeraj Limited. The following 3 entries will pass for forfeiture and other 2 for reissue of forfeited shares. In the first entry, we have debited the securities premium reserve account because amount of security premium has not been received. Share capital account debited rupees 1,50,000, that is 5,000 shares at the rate rupees 30. Securities premium reserve account debited rupees 50,000, that is 5,000 shares at the rate rupees 10. To share forfeiture account rupees 50,000, that is 5,000 shares at the rate rupees 10 of application amount received. To share allotment account rupees 1,50,000, that is 5,000 shares at the rate rupees 30 allotment money unpaid, being forfeiture of Rahul's 5,000 shares for non-payment of allotment money. The next entry of reissue at rupees 120 per share would be bank account debited rupees 6 lakh, that is 5,000 shares at the rate rupees 120. To share capital account rupees 5 lakh, that is face value of 5,000 shares at the rate rupees 100. To securities premium reserve account rupees 1 lakh, that is the 5,000 shares issued at rupees 20 premium. The narration is being 5,000 shares reissued to Manav at rupees 120 per share. Here, security premium reserve account has been credited as it has been reissued at a premium of rupees 20 per share. To settle the forfeiture account of reissued share, the entry would be share forfeiture account debited rupees 50,000, that is 5,000 shares at the rate rupees 10, which is the amount of first entry, to capital reserve account rupees 50,000. The narration is being the amount transferred to capital reserve account on 5,000 shares reissued. In other words, all the amount of shares forfeiture has been retained as profit. Therefore, total will get transferred to capital reserve account. That was the topic for today's session. I hope you all have understood it well. Before ending the session, let us have a quick recap of what we have learned today. We learned about forfeiture of shares, shares issued at par and premium, reissue of shares forfeited due to non-payment of call money or allotment either issued at par or premium, and calculation of capital reserve. I hope you all have understood today's session very well. With this, we have now come to an end of today's session. I hope you have enjoyed it. Thank you very much. Happy learning.